Welcome back to Bitcoin Advisors channel. My name is Chris. I'm bringing you this lovely cryptocurrency video right here from Westlake Village, California, where it is bright, it is early, it is fun. And I wanted to let you guys know the end of this month, we are going to be giving away our biggest giveaway ever. We're giving away $5,000 worth of Bitcoin. Yes, you'll have a chance to win $5,000 to participate. All you got to do is subscribe to the YouTube channel, sign up using one of our exchange links listed in the description below. And you can search us up on YouTube, again, Bitcoin Advisors with a Z. Obviously, if you're here, you're seeing it. And then listen to our live stream on Friday, March 29th at 9 a.m. Pacific time. We'll call your name out using your exchange ID with a random number generator. All you have to do is call 800-451-0662 and we'll walk you through the sign up process if you can't figure it out yourself. And we'll give you a free investor guide as well and access to the crypto trading course. Again, it's your opportunity to win. Links are in the description below. All right, I'm going to throw it out there one time for you guys before I get into these charts deep and dirty here. As Bitcoin has been a little bit of a bad boy here. And it looks like, well, everybody's been asking me, where's the price going? And I say, wait a second. Let me rub my crystal ball. And let me tell you exactly. Hold on a second. And no, I'm just kidding, really. But general opinion, retracements come back after a massive run on the daily time frame with almost no stops. I mean, technically there was a stop there. And gosh, I have to say I was wrong here. Last Sunday, I was looking for a bit more of a bounce. We did not get that bounce. Well, we did get a small bounce, but I was thinking more of a bounce that kind of gave us, that classic M formation on the 5-minute time frame. Sorry, the 15-minute time frame. But we did not get that. Let's see if it's apparent on, that on the hourly. I guess you could call that your M. Yeah, as soon as we lost this last low, we closed below the middle wick there. It was a downward saga. And then we did have one more bounce into the silver cross and a rejection and just downtrending ever since. And essentially, what am I getting at here? Well, on the daily time frame, those retracements typically come back to the 0.5 or the 618. In a very bullish market, right, you're going to get picked up at the 382 at 60,300. And then a real trap gets set. Again, I don't have a crystal ball here, but just kind of judging the market recently. I also heard there was outflows yesterday on the ETF for the first time in some time, like significant outflows, meaning more money was coming out than it was going in. And the 0.5 and the 618 are coming in at 56 to 52,000 in that region. If I had to guess, we're probably heading down to that area over some time. Not going to happen in one day, but that would still only be a 20% correction. 29% would take us all the way down to the 618, which is 30%, and which is the typical pre-halving dump, as we have talked about for some time. The dump usually happens right before the halving or right after. That's the miners kind of taking some profits. You can see this dump back here, but for the 2020 high, you can see this dump back here. Sorry, the 2020 halving. This dump right here. Well, let's just measure it out. For the last one was much greater. So that was 24% right there. Perhaps you call it that one. That was 40%. Chopping it up right before the halving. And, one more little dump right before the halving until it was off to the moon. After the halving, that's when the mission to Mars, the mission to the moon typically starts. And you can see this pre-halving dump right here that was 48% right before the halving. So this one's happening a little bit closer to our actual halving date. And I just want to see if there's any divergences really gearing up. I know there was some divergence on the daily time frame, not a whole lot. If you ask me, what am I talking about? Hidden bearish divergence. So that's the 3-drive variety, which gets you a shot down to the green 55. That's kind of base case scenario, a tap to that green 55. And, you know, somewhere to the middle of this wick right here, this wick right here. You got declining volatility. So what we don't want to see is volatility to gear back up, as we've had the nice 3 waves up. So could you call this wave 1? Not really. So 3 moves, and that does, you know, lead me to believe we could have, you know, one more push to the upside before it's all over. It's not all over. The bull market is not over. Your life is not over. Bitcoin will have its day in the sunshine again. Just, you know, we don't want it to go straight up. We want it to, you know, we do want it to come down, because that creates the buying opportunity for new people to get into the market as well. Somebody's messaging me for a code. Anyways, I'll get that done here in a second. Ethereum already making its way down to that green 55, smashed through our box of peace and prosperity and death and despair. Below the box, yeah, death. Above the box, prosperity. Anyways, where does the horizon for Mr. Ethereum, or where is the sun not shining? So you can see Ethereum already kind of made its way to its box. You know, close enough is close enough. I do think Ethereum is due for a bounce. What I don't like is this signature right here. As we're approaching the green 55, volatility is now, the moving average has taken a positive slope, telling us that, volatility is beginning to increase. So you can see here, as volatility, the moving average was ticking up, volatility is ticking up. As we're approaching the green 55 on the 12-hour, we ended up smashing through it. Kind of getting those same signature vibes right now. So as long as the downtrend is in place for Ethereum and for Bitcoin, you know, pressure's onto the downside, and you know, those moves happen quickly to the downside, but they also have been moving, you know, the pickup on the market has been rather quick to the upside. So definitely for Ethereum between 31.45 and 29.93, 29.2, that would be a perfect retest of this trend line, this breakout level. So what else do I want to bring up to our attention? So for Ethereum, we got the downside target, Bitcoin downside target. Let's check out Solana, and I'm going to wrap this video up here. As Solana, the darling of the market, put in a nice bearish candle. You got the 3 drives. Yeah, I'm looking for Solana to come down to that green 55 as well. Just inching its way down. You can see volatility is now declining, showing us a mean reversion bounce is in play. The bottom side of the range coming in at 162, and the 80% of historical returns coming in at 149. So that is also, yeah, I'm leaning towards that green 55 for Solana, Mr. Solana. But, you know, bounces are to be expected as well. So keep your eyes upon that. And if we do lose this level right here, more importantly today at 176, that'll be more on the bearish side as well. And pressure's, you know, definitely onto the downside. What else do I want to bring up to our attentions here? Solana and AVAX, which was another darling of the market. And we did post a bit of a trade setup yesterday. So starting off in the red there. Yeah, but as long as we're above this last kind of local low, this purple 200, then, you know, pressure's long-term bullish, short-term bearish for most of these assets out here. Matic also already down, so one of the weaker of the bunch at the moment, and already hitting the, yeah, so, you know, next target down for Mr. Matic, about 86 cents. All right, I'm going to leave you guys off with that. I hope you Tune in tomorrow. Smash the like button. Sign up with one of the exchanges in the link in the description below, and have yourself a blessed and highly favored rest of your day. Take care.